Hello and welcome to Switzer Investing Insights, brought to you by NabTrade. I'm Paul Rickard. Peter, why is President Trump talking tough on trade?
Yeah, so it's a tricky one. Particularly, I hate the fact that the market has had a very negative response to it. When he first started doing it, I thought this was an excessive response to his political promises, because we know his political stocks are low at the moment. I think the worst in presidential history in terms of a president's rating. But the reality is you're starting to see that he's using his typical entrepreneurial negotiating style, where he comes in and promises to drop a nuclear bomb on everybody, which he did when the tariffs were first mentioned. Just about everybody was going to be. And then we got an exemption. Then all of a sudden the EU got exemption. Then nearly all his allies got an exemption, and China was left with the slug. So it is a political ploy that seems to be working reasonably well.
Okay, let's have a actually look at the numbers and what the problem he's talking about. On the screen in front of you, you can see some figures for the US trade deficit in calendar year 2017. You'll notice that the deficit in trades and services was $570 billion. It comprises two parts. They actually a goods deficit, a trading goods deficit of $810 billion.
Huge.
And a services surplus of $250 billion. That's things like insurance and financial services and accounting services. So they don't make much, but they export their services. That deficit was up a little bit on the year before. It's been going up, but not as bad as the numbers suggest. Say in 2006, it was actually higher. But this is part of the problem. This is the rub with China. And if you look at the actual trade deficit or the deficit on goods with China, exports of only $130 billion and imports of $506 billion. So they've got a $375 billion trading deficit with China. So it's largely about China, isn't it?
Yeah, so there's a deficit of about $500 billion. 375 billion is China. So you can see why he's focusing on them. And he also throws in the fact that there are intellectual property thieving issues. China does copy other people's products. And also, I think there's a belief that there's just a bias against US producers, particularly when it comes to like the US semiconductors, which China this week has turned around and said, well, we might start buying more.
So why have these threats though? I mean, talking is one thing, actions is. Why does it unnerve the stock market?
Well, because when it's all said and done, we see the stock market's response primarily from the index. The Dow Jones is down 660 points. But behind it, you've got these expert players of the stock market saying, well, hang on, if this company called Apple is going to have difficulty selling its products into China because China's going to slap some kind of retaliation tariff on its goods, well, then we better not buy Apple until we find out how serious this implication is.
And that's been in companies like Boeing, for example, discussion that China wouldn't buy any Boeing aircraft. So
yeah, exactly right.
It's all the fears of a retaliation, tit-for-tat type war, isn't it?
That's right, and we don't know even the economic implications as well. So if you fear that the retaliation of say, China against US companies means that the stock prices will go down, it also means the profits are going down. It means that the GDP could go down. It means that unemployment could go up, and therefore a lot of wise, short-term investors say, let's get out until we see what's actually going on.
Okay, so we don't have a Boeing or an Apple here, so why does the Australian stock market get impacted by this?
Well, very easily to explain that one. 33% of our exports go to China. We supply the raw materials for Chinese steel. So therefore, we are going to get the backwash from anything that Trump's doing that's going to hit China.
Okay, let's look at the impact in the Australian stock market. Let's actually go back to the start of President Trump's term. We've got a graph that looks at the Australian stock market from the 1st of July 2016 up until the current day. You can see when he was elected, the market was around about 5,200, so we're still well above where he was elected.
The Trump bump.
Trump bump.
Yeah.
You can see in the takeoff in October 2017, effectively when the company tax cuts sort of got traction.
Yeah.
We're now sort of back to where it was back in October.
Yeah.
So the question is, for you, Peter, is the Trump bump over?
No. Well, it's been kind of harmed, I guess. If you look at it from where we were at around 5,200, we got up to about 6,100. We're now around about 5,800, 5,900. We've certainly lost a bit of the gloss. And the irony is, Paul, this could work out being a good thing for the stock market in the long term, because my concern would have been if Trump got in and we loved him and loved him and loved him and all his policies were accepted and Wall Street kept going up too high, then they may well have had a very serious correction, which could have even been a crash. the way it's going now, we're getting this oscillation and volatility's come. Maybe this volatility, still on a rising trend over the next year or two, means that this bull market might last 2 or 3 years, where if it kept rising, it would have only lasted 1
Okay,
year.
let me put you on the spot to end this, Peter.
Yeah.
Australian stock market at the end of 2018. Will we finish up from here?
Yeah, well, I thought we were a chance to make 7,000 this year, but I didn't factor in these kinds of entrepreneurial plays by Donald Trump. But I will be very surprised if we can't get to, say, 6,600 this year. That'd be my worst case scenario. If things turn around, if for example, the infrastructure plays from Trump kick in, there's not a serious trade war, well, then we could resume to a 5,700, 6,700, or even a little bit higher. But it will mean that Donald Trump will just have to be a little bit more considerate of what the stock market might do with some of his strange decisions.
So we're all going to be watching President Trump very closely.
Yeah.
That's Switzer Investing Insights, brought to you by NavTrade. Thanks for joining us.